Okay, g'day, Rudy here. So this video is all about oil and gas, the ASX stocks. Won't do the fuel ETF in this one, otherwise it'll be too long. But I know a lot of the punters biting at the bit to get some Woodside, like when can we top up? But also, just in this regard to this question, what is your position with regards to an electric car? Because I was opting to do a lithium video, and when you think about it, they're sort of a bit related. EVs versus petrol cars, EVs, lithium. Anyway, it's oil and gas today. So this is what I thought it might. So we basically got someone who owns one. Good on you. I'd love to know. Let us know how you going with it. Now we've basically got an equal split. It's a bit more. So 40% I will never own one, adamant petrol heads, and 56% says they're considering. And there was a couple of good comments. So before we get into the charts, we'll just go through the comments because I thought that they sort of sum up. So we've got Michael, who's just been in China, and he says over 50% of the cars on roads are EVs. ICE cars will go the way of the dodo. I don't know if I don't know if that means petrol cars, but anyway. The biggest complaint here is charging time. Right now, tech and infrastructure is a little low, so we'll be holding off until the sodium batteries are mainstream. I haven't heard a response, but my understanding is sodium. The issue with sodium batteries is they're too heavy, so they might be good for sticking it in your house. But I haven't heard back from him, but I've heard this sodium battery theme in a few places. And then we've got Zane here. So he's in the sort of the no camp. He's in North Queensland. So I asked him if it was to do with these range. He says not really. It's part of his consideration. Like last month he rode his 2 bikes. So he's got a BMW GSA and a Harley. He rode them to Queensland, and he noticed both times the lack of chargers that were either not built yet or vandalised. And he reckons his wife Serato gives him pretty good economics, and I think this is probably where with incentives to buy EVs slowly being eroded, and the government looking to tax electric cars, and he says he can't. So I think that probably sums up where everybody's feelings are at. Alright, one more bit of theory for you before we get on to the charts. What have I got here? Okay, so I've been listening to a few people in oil, and there's supply and demand and geopolitics and blah, blah, blah. One guy, I reckon, he basically said it comes down to cost. And he says there's a floor between 56 and 66, that oil price. They need $60. So there's like a floor that's going to underpin the price. So at the moment we've got 60% of transport. So oil, 60% of its use is transport, and half of that is cars. So this is where we come to this this future thing. So we've got EVs, which may or may not take over. But one I'm pretty keen on is this the primary driver of global oil demand growth from socio-economic mobility. So that's those 3 billion Asians. They get a job, they want to buy a motorbike. Like, they don't have a motorbike, so You know, they get in a job and they want to upgrade from the motorbike to the car. You know, they don't have charging stations running around in the back of bush of Asia and Vietnam, Thailand, stuff like that. So I don't think we can. I think anything we drop off in the West could be picked up by those Asian countries. And the other 40% sort of industrial plastics, chemicals, heating. So I can't see that going away either. So EVs might. So that's, you know, I guess that's the bull case for it all. Okay, so what are the charts saying? Okay, so it's getting pretty interesting. So if we have a look at the oil price, let's get rid of them. So it's got a lovely rounded bottom going on there. So we've got a declining wedge. It's a weekly. So if we go to a daily, we've actually so that was really last night, and then today it's coming back from technically to do a retest. So there's nothing. That was a pretty important candle. So there's no reason it couldn't come back down. Well, in my view, it would be perfect to see this come down here, find a bottom, and then go. Now, I'd like to look at the gold is going up against everything, but this is an important one, the oil to gold ratio. So this is when you sell oil, buy gold, and this is when you sell your gold and buy oil. But I wouldn't tell you to sell your gold. But just historically, you can see we're at some pretty historically low ratios going on there. All right, and then one for our boy Woodside, which is the more important one, which is natural gas, because most of it is of Woodside is natural gas. I had got some stats. So natural gas, so 40% of it's used for electricity, 30% for industrial, 20% for, you know, like gas heating in the buildings, and 10% transport. Now this electricity, I reckon that's going to be the kicker, the backup to these stupid windmills and solar panels. You need some sort of baseload power, and if it's not coal, it's going to be natural gas. So I reckon that's a real driver for natural gas. I think the theme is stronger for natural gas than oil. Let's just say that. Okay. All right. Okay, so onto the charts. Okay, so historically you can see where we're at. You know, we're not up here, that's for sure. And we're forming a very lovely declining wedge. And 1, 2, 3, 4, 5. So we've broken this declining wedge, and so we've done the up, and we're just doing the finding support thing here. So that doesn't look, you know, if that was a stock, you'd be looking to buy that, I reckon, with a stop under here. No, actually, technically, you could come back down here and then go. So it's not, the bottom's not, it really needs to break out. But anyway, we're just trying to make sure we're not buying at the top. Okay. All right, so the king. Okay, so I've had a couple of goes with him. Actually, so if we just, so long-term picture, where are we? Okay, so big long-term down channel here. So he broke out of this one, so that's when I put the first buy out back here, and I got a bit excited, and I put a buy in here. It was a bit early. That's because the oil price was going down and he wasn't. Anyway, I said we're in the buy zone somewhere in here, so we're in there, and So we had yesterday and then today. So that's, that's starting to look pretty attractive. So depending on, we've got the interest rate decisions tonight. But I reckon we're not trying to trade this thing. We're just trying to pick a bottom for the next 2, 5, 10 years. Because oil's at the bottom of its range. And that we want that 6.9% fully franked div. If we look at XOP, so just a bit of comparisons. So this is the oil and gas explorers on the New York Stock Exchange. So a bit of a sideways channel as well. Just nothing bullish, but just give you perspective as to what the global world's doing. If we got, so I was just trying to have a look at, there's some relationship between Woodside and the natural gas price. So up here means Woodside's expensive compared to natural gas, and down here it's cheap. So for example, back here in 22, that was the best time to buy Woodside, and in May, April of this year was the best time, which was this time down here. So this May, April, that was the bottom. So we're coming back down to becoming cheaper. So again, you just don't want to be buying when it's up here. Okay, so we've got some others on the ASX. So Santos, well, we don't know what's going on with Santos, so it's a bit hard. But the other div kings, so Beach, 7.4 div, was certainly closer to the bottom than the top of a long term since 2020. So we're getting pretty close. Karoon, 8% div. So it's sort of been hammered. Trying to find its legs around here. And then we got well, they're not really oil and gas, they're not Woodside, but they're the end part. So Ampol looks it looks very bullish. So it's a break support up next, as opposed to Viva. So sort of the smaller version of Ampol. Problem with these businesses, they don't make any money except from what they sell in the shops. Like Viva, it had weak convenience store sales, a 27% collapse in tobacco revenue. So they're a petrol station, and their earnings were hit by tobacco sales. That's because you can buy them for $10 at the chop shops these days and the barbers. Anyone from Melbourne? I heard it's a bit of an issue in Melbourne. So yeah, it's not really the best business model if your profit relies on what you sell in the shop. But then apparently, I guess with EV chargers, the idea is they get people to sit down and charge their EV and have a coffee. I don't know. Anyway, we're just going through it, and there's a few little ones. So at Strike Energy, they're currently producing, focusing on developing conventional gas resources in the Perth Basin in South Australia, aiming to be Australia's lowest cost onshore producer. Got a lovely declining wedge there at the bottom, if you're interested. Then we got this TDO, 3D Energy, oil and gas exploration company. So we're now in the speculative land, if you're into that type of thing. But it seems to have a pattern of sideways up, and we're in the sideways. And then there's Po Valley. This one was brought to me by Bob. Debt-free, cash flow positive, junior gas producer. with Michael Gentile as a large investor and director. Anyway, it's got a rounded bottom, tick. So we're down here at the moment. So we're at the bottom. So if you wanted to buy it, if it was me, I'd be waiting for a break of 5 cents. But just putting it out there. And what's the other one? This is another one that was given to me. We've got some punters in this subscription. Omega Oil and Gas, targeting gas and oil production post 2027, led by CEO Trevor Brown, former Santos. So it's a pretty ugly candle there, up and down. But anyway, if you're interested in that space, all right. Well, that's the oil wrap, and we'll see when we wake up tomorrow morning what Jerome Powell's done to the share market. All right, so